Good morning, everyone. This is Black Forex coming to you with another pre-market analysis video. This morning, we're going to be looking at USDCHF. Before we get to breaking down this Forex trade, we have to say that this video is for education purposes only. This is not financial advice, but we all know why you're here to find good financial Forex content and improve your ability as a trader. So, with that said, let's get started with breaking this down. Okay, so as we stated in our previous video, in our previous recent videos concerning the USD CHF, that the USD is one of our weaker currencies heading into this trading week, and has been one of our weaker currencies for actually quite some time. And the CHF is also one of our weaker currencies too, with the having poor, very economic news that's been coming out with over the past several weeks, and that the whole basically continent of Europe is suffering through inflation. So each one of their European and respective currencies are all in a state of a weak limbo. But one thing we also have to watch for is that traditionally the Swiss franc has been a safe haven for when there's a panic market. So it can induce strength at times when we have global conflict, like as if we get news if the European conflict between Russia and Ukraine can move into a global conflict. And then we have something that's been untraditionally happening with the USD acting as a safe haven currency as well throughout this European conflict that anytime it's threatened to go into a global conflict in which the USD has acted strong as well, but the USD is traditionally not a safe haven currency. That's why I said it's non-traditionally acting as one. So basically, we'd have two currencies of equal strength, basically heading going against each other, which is why you just see a forever, almost seems like a forever perpetual range happening, where you have slight breaks up and slight breaks down, where every time we get to this 0.92889 area, we drop down, and every time we get to this about 0.991 area, we tend to find a place where we are bouncing back up, and that's looking like the case. Now, unless we have a significant shift in our fundamentals, which would cause the CHF to become much weaker and the USD to become much stronger, that will allow the chart to have an aggressive push up towards the long side. Or if we have a shift in our fundamentals in which the CHF becomes much more stronger or the USD becomes much more weaker, then that will have a push towards our downside. But unless that happens, we're just going to be in this perpetual state of a range bouncing between these two price points. Now you can trade this by placing your bias here, writing it up, and placing your sayings here and writing it down. But also that's also dangerous too, because if you do have that fundamental shift due to that we're almost like between an unstable and a panic market, you can be in a buy position, and the next thing you know, prices just start to drop on you. So we hit your stop loss. You can be in a selling position, and the next thing you know, fundamentals change, and then boom, it just starts to explode up. Okay, and then it'll hit your stop loss. All right, so I mean, you can trade this pair if you want, just trading between these two range extremes. But personally, my trading style and what I teach is to trade momentum and movement, not to just trade what the chart is telling you, to incorporate fundamentals in your trading so you can kind of trade with the banks and not against it. Okay, so I hope this information was helpful for you guys. Happy trading.